Hello traders, welcome back to the channel. This is January with Trading the Charts Pro, and in this session we're going to break down the overall market to see where the market is going to go using technical analysis as well as our trading experience to make a projection and build a solid game plan as to where we see the market going to into next week. So stay tuned, let's jump into it. All right, guys, here we are. We got the ES futures up, and guys, what a crazy week it has been from last week. But if you never understood it, take a look at our last video, which is linked up below, up top or somewhere around here. You will see how I broke down everything that was going to take place or has taken place from the last week here. All right, so now we're back, and what are we talking about? Well, are we pretty much at the bottom of this correction? We're gonna break it down, and we're starting right here with the ES. All right, so let's look at the chart, guys. Man, I'm telling you. So last week we broke the channel, guys. We broke the uptrending channel that the ES S&P 500 was in, and the market pulled back down all the way to the 50. All right, the market also break the 50 EMA, and the market fell and came lower. But are we doomed and gloomed? Is this really the end? Well, guys, when we add another additional technical indicator to see what can the market actually throw at us next, we're seeing that potentially this may be actually the bottom of this sell-off. Hence, we are ready to make a move back up. All right, we don't know 100% if the market is going to come back and test the top of the resistance of the channel. Now we have to look at this, and we have to use this uptrending support level, which we can see here over and over. Can the market actually bounce and come back up here? Yes, today we got the approval of the COVID release package. So at least in the short term, when the market opens, at least futures open on Sunday, we're going to bounce and come back up here, 3,900 level, and then we will see where is the market going to go from here on forward. Why is this level a support level? Guys, let's look at it. Technically, when we pull out our Fibonacci retracement tool, right? And I'm pulling up right here to show you exactly what I'm talking about. Fibonacci retracement tool, and we take it from the breakout level, which is, you know, right here. We take the breakout level. Let's fix this up. Let's do that one more time. So we take the breakout level, which the market breakout here, and we draw this thing coming all the way up to where we had the last high. All right, so the last high was here. The market actually broke out from this level, and we had this very nice run to the upside. Now from that run we pull back down, but we only pull down into the 50-60% level. What this means is, guys, this, at least for the S&P 500, at least for ES futures, this is looking like it was just a retracement. All right, so if you took some profit while we were selling off, here we are. We got the bounce on Friday. Now on Sunday, Monday, we need to see the continuation that gives us a confirmation that we will be long this market again to the upside. Why? Because the market just retraced into the retracement level from this breakout running higher. We retraced right here, and we got the bounce. This is showing me that it's time to go back into this market and start going long again. What would, you know, give me a sense that, hey, we may be looking at something different? Well, only thing would cause me to look at this differently is if when the market open again, we get another bearish candle which start taking us straight back down to the downside. And I pretty much 90% believe that we're not going to get that, because the stimulus package at least is going to bounce this market and push it higher to the upside. All right, when we look at the MACD, guys, the market has been down, momentum was down, but we did not get a MACD and signal line breaking down into the negative, which would show us that the momentum is actually going deeper. So that's everything to tell us right here. We got the line, you know, we're curving up. We got the histogram showing that momentum has started to pause, and we're looking to move back at least to this upside. So those are all technical indicators that is giving me confidence that we're ready to move back to the upside. All right, let's move on over and look at the NQ and see what tech is doing. All right, guys, in the last video that is also linked up top, we talked about how tech was actually the weakest sector. We saw this bear flag setting up right here. The market typically bounced at least worst case scenario on the 50, but we were in an uptrend that would pull back to the 10 and the 20, pull back to the 10 and the 20. Here we broke, came to the 50 and bounced. When we pulled back down, we saw that it was clear we would not get a bounce at the 50 EMA, much more the 10. We clearly sliced through that, and we came right here. We consolidated short term, and we saw the breakdown coming. And I said in that last video that the market has to come back down to this retracement or the old resistance. And if we're going to go higher, old resistance needs to hold as support. Guys, we got it. We came right down to old resistance, which the market had problem at these levels over here in the past, back in September of 2020. Now the market has officially pulled back to that level, and at this level we see clearly buyers are coming in, right? So we need to get a confirmation that we're getting a follow through on this bounce to the upside. Yes, this bounce doesn't mean that we're coming all the way back up here to 1400 or 14,000, excuse me, because we also seen that there is a potential trend reversal setting up for the tech stocks. So I'm looking at this as, you know, there is a short-term opportunity to catch some stocks that are sold off and ride them up short term, because what we're seeing on a technical basis, guys, the market came down hard. It can bounce, come back, which is a retracement to the upside, taking us roughly to the 13,250 level. And when we get that, there is also a potential that tech can give us another leg down. Where would that another leg down be? It would bring us roughly into the 200-day moving average for the overall tech sector. So short term, I'm looking for a bounce. Can we get back above the 50 EMA? Can we get back above the 10 EMA? If we are able to do that, then that means that the market has pretty much stabilized and we can look to get another move to the upside. But right here, right now, I like a lot of tech stocks at the level that they are, right? So I'm at least going to be applying the scaling in method where, you know, we're going to start gradually pick up a couple shares of some stuff that we like. This pretty much means that if you are intending to buy 100 shares of a stock, this is a level that you pick up 20, and as price action continue to work in your favor, you add a little bit more to those positions. All right, guys, let's jump on over to the YM and see what is looking for like for the Dow, and where is the Dow going to go now. All right, so guys, when we look at the Dow, man, the Dow is strong. There is nothing technically wrong with the Dow market. All right, the Dow break out of the resistance level here, and we had this very nice uptrend. We pull back to the 50 EMA, 50 exponential moving average, and we bounced and we had another leg higher, right? We came up into the resistance that we had here, you know, this level up here, and then we pull on back down, rally, pull back down. Now we got the bounce, significant strength on Friday, and I'm looking that this is pretty much the bottom. Why? Because last time we bounced at the 50 EMA, and guys, we got another leg up to the upside. So now my target for the Dow is going to be coming up and taking out the 32,000 level, and then looking to come back and kiss that resistance level further on to the upside. Guys, why do I use the futures market to break down the overall market? You can also use the Dow indices. It's pretty much the same thing, with the the exception that when I look at the futures, I also trade futures, but this gives me a way to see what is the possibility for the actual Dow to do when the market opens on Monday. The futures market opens 7 days a week, so I can always look at the futures market to see what is in store for the actual stock market the next day. All right, so 12 o'clock at night, 3 o'clock in the morning, I can look at the futures market to see where things can potentially go when the market opens. Yes, things can change throughout the course of the morning until the market opens, but it's a good way to see, okay, what's next for the overall market. All right, so guys, if you did find some value inside this video, one more thing before we go, let's look at the VIX. Guys, also on Friday, I realized that the VIX is pretty much coming back down, so we may actually, that is actually opening doors for the stock market to continue higher. So we got the VIX, rised up early last week, it came back down, and then boom, we rised up again. So at least in the short term, what I'm seeing here in the VIX is, this potentially looks like a M pattern right here. We got a quick double top at 30, and we broke back down below that 200-day line. That means that the VIX should come back down to around 20, hence opening the door for the stock market to rally and move back to the upside. All right, so guys, if you did find some value inside this video, hit that thumbs up, and also look to see you in my next video. Thank you for watching.